Anil Sahgal of iSave joins us in the studio this week to answer your questions on insurance. Anil, thank you so much for joining us in the studio. Now, this is the time of the year, obviously, when we are thinking about tax saving, when we are making our tax saving investments. It's fairly late in the year, I must accept. But we're all aware of the fact that Section 80C under the IT Act gives us the 1 lakh rupees. But there's this added benefit of health insurance as well, where we can buy health insurance for our families and for our parents and get an added benefit of 15,000 for our families, 20,000 for our parents. Is it too late to process a health insurance policy before the end of the year? How long does that process take?
Yeah, I think it's not too late at all. It's a good time in case no time is too late. From a tax saving perspective, yes, one could say February, we've left it fairly late. But if you need health insurance, you need health insurance. You should go out and take it anytime.
So if I start the process today, after watching this show, and if I start looking through health insurance and go through the whole process, how long will it take before I have a policy in my hand and I can use that for my tax savings?
It could be as early as the next day that you could have a policy in your hand. It depends really on the product that you're choosing, whether it is available for purchase online, what your age is, and your age determines whether there's a medical requirement or not. So for some age groups, for example, over the age of 45 in some cases, and 1 or 2 products over the age of 55, you require medical examination. So that can take a few days, and after which obviously the underwriters kick in. So typically, if it is a non-medical case, you could have a policy online the next day. Otherwise, it could take between 10 to 15 days to get a policy issued.
Alright, so an online policy, if you go out and buy it today, after doing enough research, you'll have the policy and the receipt in your hand in less than 24 hours, provided you don't need an additional medical check before you get that policy. Now, that will give you a deduction of 15,000 rupees if you buy a policy for yourself and your family. Now, if you buy a policy for your parents who are senior citizens and you pay the premium, it's an added deduction of 20,000 rupees from your salary. Now, for senior citizens, when I go out to buy that policy, what should I keep in mind? How do I decide between the policies that are available in the market?
The first thing to consider is make sure that the policy is available for as long a period as you think your parent might need it. And lifelong is obviously better than age 80.
The best option.
Exactly. Right. So that's the first consideration. The second consideration obviously is what are the waiting periods and what the product is structured like. So you need to go out and look at the features.
Explain to us this concept of a waiting period. How would this work on a senior citizens policy?
Okay, so the waiting period is essentially typically a 1-year period for senior citizen plans, and could range from 3 to 4 years or 5 years in a normal plan. What the waiting period signifies is simply that for a pre-existing illness that you might have, you have to wait for that time period given in the policy before you can make a claim for that pre-existing illness.
For a family that lives in urban India, semi-urban India, while I am insuring my parents who are senior citizens who possibly already have illnesses by the age of 60, what is the ideal cover I should have to be secure with that insurance cover?
The ideal cover should be a function of A, where you live, which is urban or semi-urban, and secondly, what your own income level might be, and therefore what kind of treatments you want to ensure that you cover and what kind of facilities you want to ensure that your parents can get treated in. But having said which, I think any cover which is above 5 lakhs is a good cover. If you then are able to take a larger cover, you should consider it.
And of the policies available in the market, which ones would you recommend right now?
I think, again, it depends on your requirements. Bajaj Allianz has a senior citizen plan you should look at. Star also has a red carpet plan, which is a fairly good one. National Insurance has a senior citizen plan, the Varisht Bima plan, which is also a good plan. You should go out and compare these policies and decide which one suits your requirements better.
This is important, of course, when you're buying health insurance, to make sure that you look at all of the various small fine print that you have in that policy and make sure it matches what you and your family needs. Like Anil was telling us, it's important to get a senior citizen cover because the tendency is that the senior citizens will claim more health insurance than the younger members of the family. So if you have a separate cover for them, it secures everybody. I have some questions that have come in during the week. R.V. Rao has written in. He's 58 years old and he's a smoker, and he wants to know which would be the best term cover for him to buy. He also wants to know, if a 35-year-old wants to take a term cover, can he include his wife's income to prove his financial status to get a cover of 1 crore rupees? Now, we're going to take these one at a time. A 58-year-old who smokes, is there a term cover available to him, and what would be the best one?
If you were to go online, for a person who's age 58, I think you could look at the ICICI Prudential Eye Care, which is a plan which does not differentiate between a smoker or non-smoker in terms of premium. Or you could look at the Aegon Religare item, which is also a very extremely finely priced product. So these are two plans that you could certainly look at. You could also look at the HDFC Life Click to Protect.
All right, and quickly for the 35-year-old that he's written on behalf of, can he include his wife's income when proving his eligibility for a 1 crore cover? Is that
Unfortunately
okay?
not.
Unfortunately not.
You have to basically be judged by what your income is, what the loss to the family would be in the event of your own death.
Right.
And therefore, the life cover is to really replace that lost income.
What he should do then is to split up the cover for him and his wife. So they both get insurance. That way his wife's income is also accounted for.
They should be taking separate insurance.
All right, Mr. Rao, I'm glad you are declaring the fact that you smoke while you're getting your life insurance policy, because it's very important. If the insurance company discovers it later during the time of the claim, it is possible that they might not make that claim. Sudhir has written in. He tells us he has LIC's Jeevan Anand policy for 10 lakh rupees and his father has the same policy for 5 lakh rupees. He wants to know if he can take term covers for 50 lakh rupees for the two of them, and what would be the best way to do that. Now, he tells us his father is aged 58. Now, does it make sense for him to buy a policy at 58 for 50 lakhs each for both the father and the son?
So firstly, the father should be taking a policy for himself. I don't think a major son has an insurable interest to go out and take a policy for his father. Secondly, the father would only get an insurance cover based on his own income and what the loss of that income might be in the event of his death. So insurance companies will ask for his income proof, and the sum assured will be determined by that. So that's what he should do. If indeed his father would like a 50 lakh cover, then he should have an income of at least 3 lakh or so of rupees, and then take a cover accordingly. For himself, for 50 lakhs, again the same rule applies. He should have an income of at least 2.5 to 3 lakhs.